welcome friends. Let us take a new case in marginal costing and a very special case. Again, I can say that one of my favorites, but this is exceptional case. And the main thing in the case is probability and marginal costing. Some innovative paper setter sat a question or say created a question in which a concept of probability and probability distribution has been included at a primary level, and marginal costing or rather break-even analysis as well as profit planning or say CVP analysis has also been covered at primary level. Though the calculations are of say very primary level or lower level, but the combination of the concepts of probability and break-even analysis, that is very good blending by the paper setter. I congratulate him or her. Let us start. Nissan Ltd, which makes only one product, sells 9,000 units, incurring a loss of rupees 10,000. That means during the last period, they sold units 9,000 and made a loss of 10,000 rupees. That means the numerical value of loss is substituted with negative sign in the formula or wherever it is necessary. The variable cost per unit of the product is rupees 8 and the fixed cost are rupees 28,000. The company has estimated its sales demand as under. On the basis of the past experiences or historical records, they have prepared a probability distribution. Sales units possible are 10,000, 12,000, 14,000, 16,000 and 18,000. That means these are say all possible mutually exclusive outcomes of the sales activity. Probabilities are respectively 0.1, 0.15, 0.2, 0.3 and 0.25. Since this is a probability distribution, we can say that no other event is possible. That means sales are possible either 10,000 or 12,000 or 14,000 or 16,000 or 18,000 units in the forthcoming period with respective probabilities given. No other case is possible, exhaustive number of cases, and all are mutually exclusive cases. At a time, either 10,000 units can be sold or 12,000 or 14,000 or 16,000 or 18,000. But simultaneously happening of two sales quantity in a single period are not possible. What is the required calculation? Number one, what is the probability that the company will continue to make a loss? To make a loss means to make sales less than BEP. Number two, what is the probability that the company will at least break even or company will break even? What do you mean by break even? To make sales either exactly equal to BEP or greater than BEP. What is the probability that the company will make a profit of rupees 4,000 or at least rupees 4,000? That means the company will make a profit of 4,000 or more. That means the company will make a sales giving profit of rupees 4,000 or more. Now, first of all, there is no information about selling price or contribution per unit. So first of all, to make all other calculations demanded possible, we have to find out either contribution or selling price first. And we have information about variable cost per unit 8 rupees, fixed cost rupees 28,000, loss rupees 10,000 and sales 9,000. If all these are substituted in the formula of sales or required sales, we can have contribution as well as selling price. So let us first of all calculate that out of the answers demanded. Sales equals to fixed cost plus profit. We don't need to write minus loss in the formula at least. Just substitute loss as a negative amount. Sales 9,000 units equals to fixed cost rupees 28,000 currency. Profit is not there but loss, so negative 10,000 and contribution is missing. So ultimately contribution equals to rupees 18,000, that is total contribution, fixed cost minus loss instead of plus profit on selling 9,000 units. So now we can say that at present or in the last period the contribution was rupees 2 per unit. Let us calculate selling price. If contribution is sales minus or selling price minus variable cost, obviously selling price is variable cost plus contribution. just calculated, say as a result of curiosity or whatever. Now the first thing is, what is the probability that the company will continue to make a loss? To make a loss means to make a sales less than BEP. So if we calculate BEP, we can easily find the probability of sales less than BEP. So let us first of all calculate BEP, and that will be break-even sales quantity, because we have fixed cost as well as contribution per unit. Whenever we substitute contribution per unit in this formula, the result will be break-even quantity in terms of number of units. That is rupees 28,000 divided by rupees 2 as we calculated earlier. So the break-even sales quantity or BEP comes to 14,000 units. Now probability. Making loss equals to probability sales less than BEP is equal to probability of sales less than 14,000 units is equal to probability of sales. Now two possible quantities are there which are less than 14,000, 10,000 units and 12,000 units. So sales 10,000 units or 12,000 units. If any of these two events occur, then the company is going to make a loss in the forthcoming period. So it is nothing, they are mutually exclusive. Now probability of 10,000 units is given to be 0.1 in the probability distribution given in the question, and probability of sales of 12,000 is 0.15. So probability of making loss comes to 0.25 or 25%. This is the main point, to recognize or to interpret the question given in the problem and way of solution. We have been asked that what is the probability the company will continue to make a loss. So our interpretation is, to make a loss means to make a sales less than BEP. We can find BEP. We can find probability of sales less than BEP from the probability distribution given in the question. So ultimately the interpretation is probability of making loss is 25%. Number 2 is, what is the probability that the company will at least break even? Now what is break even point? It is 14,000. So the second case is probability the company will break even. That means the company will make sales at least or sales equal to or greater than BEP. That means probability of sales 14,000 units or more. I am writing all the possible interpretations. Please learn carefully. Probability of sales of 14,000 units or 16,000 units or 18,000 units. Why only these two? Since the probability distribution is given in the question, no other event is possible. Exhaustive and mutually, the concept of exhaustive and mutually exclusive outcome. So ultimately the probability that the company will break even equals to probability of sales of 40,000 or probability of sales of 16,000 or probability of sales of 18,000 units. Now the probability of all these three are 0.2 plus 0.3. Why addition? All these are mutually exclusive cases. At a time only one can happen, and 0.25. So the required probability or probability that the company will break even comes to 0.75. That means 75%. There are 75% chances that this time in the forthcoming period the company will break even. See these two events. Either the company will make a loss or the company will break even. These two are mutually exclusive practically. So the probability of these two and the summation of them is 1, because either the company will make a loss or the company will at least break even. The third question or sub question is, What is the probability that the company will make a profit of rupees 4,000 or at least rupees 4,000? Let us first calculate profit. Probability profit of rupees 4,000 or more at least means sales giving profit of rupees 4,000, because we have probabilities of sales. Directly the probability distribution is of sales and their probabilities. So first of all, let us find the required sales for the earning of profit rupees 4,000. It will be 28,000 plus profit desired 4,000 divided by contribution per unit rupees 2. So it comes to 16,000 units. So we can say that probability of profit of rupees 4,000 means probability of sales of 16,000 units. 4,000 should be taken as at least 4,000, because according to the probability distribution given, sales greater than 16,000 is also possible. So we interpret that it is profit of at least rupees 4,000. That means sales of at least 16,000 units or 16,000 units or more. It is not exact 4,000 or 16,000. That is probability of sales of 16,000 or 18,000, because more than 16,000 only 18,000 is possible. Probability of sales of 16,000 units or probability of sales of 18,000 units. They are given to be 0.3 and 0.25 respectively. That means the probability of, or rather the probability that the company will make a profit of rupees 4,000 or at least 4,000 means the company will make a sales of 16,000 units or 18,000 units. That is 55%. I hope this new kind of problem you enjoyed to study this problem. Thank you very much.